What's up traders? Tom here with another video. Today we are covering something slightly different, but incredibly important topic when it comes to the future of entertainment and the future valuations of several companies. Joe Rogan, from his #1 Apple podcast series, The Joe Rogan Experience, has signed an exclusive deal with Spotify for $100 million. This type of thing is going to start becoming more common over the next few years as multiple companies compete for superiority. Let's take a look at what we know and what we can assume might happen with this deal. Stay tuned. So our story today starts with Spotify's market cap value soars by nearly $4 billion in wake of landmark Joe Rogan podcast deal. And it's pretty amazing to think that a $100 million deal has put $4 billion of valuation on the stock itself. So Joe Rogan's podcast obviously adds value beyond his actual show. It's about making the platform legit. And that is what Spotify is trying to achieve. I saw another YouTuber mention that it was kind of similar to a sports club that was sold, and then that selling of that sports club becomes a precedent that therefore all other sports clubs are worth more. And that was the Clippers that was sold to Steve Ballmer from Donald Sterling back a few years ago. And basically, as soon as he sold it for $2 billion, all of the other clubs became worth a lot more. And that is true. When you sell something for a high valuation, all of the other things that are similar to that will become worth more. And this certainly has happened before, and it's happened in a very similar way to this podcast deal. So Joe Rogan's podcast makes around $30 million annually, with nearly 200 million downloads per month. And I don't even necessarily think this is exactly how many downloads there are, because I know that for me, being a viewer of several of Joe Rogan's podcasts over the years, I actually watch a lot of snippets that come up in videos on YouTube. And believe me, they're not always from Joe Rogan himself. So he has a wide network of fans with a huge audience, and he is #1 for a reason. Spotify chose the #1 podcast because they wanted to make their platform legit. And while the deal is of $100 million, to me actually sounds pretty cheap, and I can see why the stock has gone up, there are some concerns that we can look at with previous deals that have been done over the last 2 years and why it may not be worth the $4 billion valuation that the stock is currently claiming. So another deal that was done that many people will be aware of was the deal between Ninja and Mixer. And Ninja, if you don't know who it is, was a Twitch streamer, and he was the #1 Twitch streamer by far on the platform. And Mixer is owned by Microsoft, and they actually paid Ninja a massive sum of money over probably a multi-year deal to bring his services to their streaming platform. Now, initially, this certainly worked, with Twitch total hours actually going down since he left and since the second person, Shroud, left. But the problem was, while several creators went over to Mixer and started creating content, a lot of the fans started not to move, and they came back to Twitch for the far superior experience. So it's about the experience for them in terms of the platform, kind of like YouTube is the #1 video platform on the internet. So Ninja's move left 14 million followers behind, and he now has around 2.3 million subscribers on Mixer. So numbers didn't make necessarily that much sense in terms of conversion. I think Joe Rogan has a much more unique product where people will seek him out, but it just shows you that just because you think that everyone will move, they may not. The same thing happened with Shroud. He lost around 85% of his viewers after he moved from Twitch to Mixer. Same person, different platform, playing the same games. So it's pretty amazing how many people did not move to watch Shroud on the other platform. We've seen it on YouTube recently with PewDiePie signing an exclusive live streaming deal with YouTube. And we'll see how that works out over the long term for Google and for YouTube. So did Spotify overpay? I don't think so. I think they absolutely got a great deal, and this is a great move from them. We saw in their recent report that their platform grew by 200% quarter four over quarter four, and this was spurred by purchases of all sorts of things. Of course, they're trying to push their podcasts up, and they now have more than 1 million podcasts available on the platform. So let's now take a look at the actual stock price of Spotify and what's happened since the announcement. So here we have Spotify, and we can see the incredible strength since the announcement, and more importantly, the break of the previous resistance at around $160. So this level was a key psychological level that has now been broken. What's more important is that the stock price is now near its all-time highs. And notice after it launched on the stock exchange, it went very quickly, like many tech companies do, to around the $200 price, and then fell off after people realized the earnings weren't going to be as good as expected and the growth may not be as good as expected. And this happened with Facebook, it happened with Twitter, it happened with pretty much any tech company that's gone on the exchange over the years. The initial hype fades off. And it's this initial hype that I want to talk about. So we've got the hype of the podcast going to a different platform. I think it's going to be absolutely worth $100 million. But is it worth $4 billion? So does it make the platform legit? Probably. Does that mean the platform is a great podcasting platform? Not necessarily. And as we saw with the other people, it may not be worth this. So generally with technical analysis or with stock valuation, the way you want to look at it is the initial hype and the FOMO period is not usually where you want to buy. But if the stock was to come down, let's say down to this $160 again, which it very much could do during this crisis, it could become a buy opportunity that you're interested in taking it long term. It also gives you the opportunity to actually go and test the experience. Why not download some of the podcasts, feel the experience of Spotify? Is it any good? I don't personally use it, but doesn't mean it's no good. So if it is a superior experience to what you previously were listening to his podcast on, then that could mean a huge chunk of his audience comes across, because he will see a reduction. And I think the main reason he's going to see a reduction is because YouTube and the internet in general, but specifically YouTube, was doing such an amazing job of marketing him. When you think about it, I was coming in, looking at my browse and seeing pictures of Joe Rogan's face, kind of like this thumbnail that I put out today, everywhere. And I was just clicking them if the title interested me, and I'd listen to a snippet of the podcast. Now, they weren't all from Joe Rogan himself. They were from all sorts of people making videos about him. And this is what I think is going to happen in the future. I think you're going to see, because his content is exclusively going to be on Spotify, he will lose the ability for everybody to see his content on whatever platform they choose. And that will hurt his viewer base. So that's probably my main point today. I don't think everyone's going to move across. And while I think the deal is great, it may not be worth as much as the stock market currently thinks it's worth. Kind of reminds me of Disney when they bought Lucasfilm for $4 billion. Now, people thought this was too much and this was expensive. I thought it was really cheap. But I remember if you look at the actual stock price, this happened on 30th of October 2012. So if we bring up a chart here, you'll see that it went down over that period. And then, of course, it started to recover. Nowadays, it seems like the stock exchanges and the market is doing something completely different. And it reminds me of the tech bubble, which I didn't personally trade, but I have done a lot of study on. Every single week in the tech bubble, companies were going 20%, 10%, 15%. And that's become the new norm over the last couple of years, especially with stocks like Tesla, where it is not unknown to see 20 or 30% stock moves in a week. So I think the stock market is conditioning everyone to expect amazing, crazy returns. And this leads to valuations being way too high. And when you've got those valuations too high, you are starting to talk about extreme losses that you could take for long holding these shares. So you've got to be very careful about where you buy a share. And I think in light of this news, I'm actually more interested in Spotify, but I'll tell you what, I will be doing my due diligence and I will want the correct price before I would even consider getting in it. Because right now, it is not one of those stocks that I would be looking at this current price. Hopefully this helps everybody today. If you're enjoying our content or you enjoyed this video, make sure to subscribe, hit that alert, and of course, comment down below on your thoughts on this move and whether Spotify's platform is any good, and like the video, and we'll see you in the next one. Thanks everybody, and happy trading.